there's obviously lots of chat going on internally and with clients about what might happen. So I don't know how many of you are sort of worried about it, but I thought it'd be nice if Richard Dean could join us. Richard works for Crowe Financial Planning. I know there might be others on the call who work in that industry, but the we have an independent FCA regulated business that Richard's a director of. So it just felt like a good chance for Richard to just chat about what he's talking to his clients about, and then I could chip in on what I'm talking to my clients about. And if all of you guys have got any thoughts or you're talking to anyone else about ideas, let me know. But we're all working and it's all guesswork, isn't it, Richard? Fair to say. Yeah.
Yes, I think that's a good description. It's a big question mark, but more so than most budgets in recent memory, there's an awful lot of noise about what is coming. And interestingly, some of the language around what might be coming has changed as well. So I'll cover off a little bit about that. Um, I know that my diary is now very busy with lots of client calls in terms of what is coming. Where's a good place to start? Capital gains tax is definitely one that is mooted to change. It's been at historically low rates on for asset sales and indeed for property sales, albeit at slightly higher rates for over 15 years now, and so that's likely to change. So if you're a basic rate taxpayer, you can sell a share or an asset and pay only 10%. If you're a higher rate taxpayer, you pay 20%. It's likely, well, what we certainly know is that those rates are not going down. And so there's a lot of talk for people who have portfolios with unrealized gains. What should they be doing in advance of the budget? It's very difficult to sort of advise formally when we don't know what the legislative changes are going to be. Um, but in specific instances where we know, for example, the capital is going to be needed by clients or trustees or whatever their situation within the next few years, it seems to make sense to crystallize those gains at known low rates rather than potentially wait for a tax hike. So that's definitely one strand of the conversation. I think it's unlikely to see that we'll see a mid-year change in rates. That's very unusual. But um, I think the counterpoint to that, of course, is that nothing is off the table. I think, and so that's one strand that we're talking to people about. Changes to pensions, which affects the vast majority, potentially the vast majority of people, particularly now after auto enrollment and virtually anyone in an employed situation saving into a pension now. Um, Potentially, they're going to remove higher rate relief on pension contributions. There's talk about equalising the pensions relief at sort of 30% for everyone. So basic rate taxpayers get a bit of a kicker. Higher rate taxpayers don't quite get as much relief. It's a big bill to the revenue. It always surprises me quite how large it is, but it's somewhere between 35 and 40 billion pounds a year, the cost of pensions tax relief. So that's a good one to go after if they want to raise some serious amounts of money. Removing higher rate relief and dropping it down to 30, I mean, it's an estimate, but it would probably raise or save, whichever word you prefer, something like about 8 billion pounds a year. So that's quite a big number and quite an easy one. Again, it's unlikely to be mid-year, but it might therefore be beneficial, particularly for higher rate taxpayers to be stocking their pensions pre the end of this tax year, which will keep me busy. So that's good. What else? Pension death benefits as well. There's beneficial rates for if any individual dying pre-75 can pass their pension free of any tax whatsoever to their nominated beneficiaries at the moment, which is an unusually generous system and an unintended byproduct of some pension changes back in 2015. So I think that might be removed. That's a quick win over that could be overnight. Um, Um, so those are some things. I mean, there's lots of rumours. The removal or reduction of the ISA allowance subscription is something that's I've heard, particularly online. Again, unlikely to be mid-year, but they could slash the amount that you can put in, which is currently £20,000. That could come down. I doubt they're going to remove the tax efficiencies of ISAs altogether. But again, nothing really is off the table under this new government, I think. Um, and potentially some changes around inheritance tax, which in the first instance I might fire that back at you, Nick, if that's okay. No.
Nick, Nick
Ah,
disappeared.
Well, it's
oh,
well, maybe not, Richard.
Yes.
oh, I
You
thought I
frightened
talked
him.
for too long.
He's deep in thoughts.
Does anyone have any queries or observations around the potential for capital gains tax on pension changes?
While we find Nick. Any? I know we've had lots of people asking about pensions. We've had quite a few people saying, they're concerned about the impact that might have on them.
Yeah, I suppose the other thing on the pensions piece that's been mooted is the potential reduction in the ability to take a lump sum from your pension as well, which is currently at the bizarre rate of 268, 275 as a maximum lump sum for most people, potentially reducing that. I think that's unlikely, personally. I think that is unlikely because some people will have planned extensively to use that lump sum, for example, to repay a mortgage at retirement, and removing people's ability to crystallize those plans and crystallize those pension benefits seems unusual. It would be inequitable between the people coming afterwards and the people that have gone before. So I think that probably is unlikely. But the change to the tax relief on contributions is more so. Nick, I tried to fire the IHT piece over to you in the first instance, but you did a very good job of being a frozen mannequin.
Victoria, my wife, unplugged the internet briefly. I was
Thanks
like,
for listening
I'm
to
in the
you,
middle
Nick.
of a meeting. Can we just put that back in? Anyway, yeah, no, I didn't miss the question. I missed the question, but I mean, it is a topic that's been discussed, and yeah, I don't know if any of you are sort of family business owners or got a business, but that's where most of the kind of angst is at the moment, because at the moment, if you've got a valuable family company, then IHT is not necessarily a worry because you get full relief for it, and it's not in your estate. So, and traditionally, it was quite nice to. Well, it was one of the problems of the tax system. They actually people didn't want to pass on their assets because it was tax free in their estate, and then they also got this tax free uplift in their base costs. So if you died with a valuable company and pass it on to the next generation, they could sell the whole business without a tax charge. So and that is the case at the moment. So it actually discourages succession planning to some extent. So that's felt to be a bit vulnerable, really, that you can get both an inheritance tax-free asset and a capital gains tax uplift. So there is a lot of concern amongst family business owners who've got businesses that are probably worth more than they will ever need. They're thinking, well, I need to accelerate my succession planning and do something. And that is not a quick decision. And it's fine if you're a fair way along that process. But you're not going to suddenly start thinking about it and do something pre-budget. Well, if you did, you could obviously make the wrong decision because it might be not the right thing to do. And then of course you've always got that dilemma as an advisor that you kind of advise them to do something, and then nothing changes, and they've lost this opportunity for this tax-free uplift. So it's a real challenge that we're talking to clients about. But a lot of my wealthier clients are doing planning around trusts at the moment. Um, and I think IHT is an angle really for the government because well, A, because they haven't got that many places to go, and B, it's easy to hammer people with capital, isn't it? So having a graduated level of inheritance tax, for a higher estate would be quite easy to do. It would be pretty painful if they started putting it up above 50%. Even if they went above 50%, it would be horrible, wouldn't it? You pay tax all your life, and then they take, they take 40% of it when you die if you don't plan properly. So yeah, I don't know. I don't know. People, there's a lot of worry that like the wealthy people will leave the country, or I've definitely got two or three clients who are contemplating leaving the country at the moment, which is sad, really, especially with the non-dom rule changes. So IHT definitely vulnerable, and I think the capital gains tax side, there's a lot of angst because people want to get transactions away, and it's not always easy to do that from a family business point of view. You've got to go through a big due diligence process. I know John is on the line. I mean, he must be madly busy, I should think, on transactions because most corporate transactions you exchange and complete on the same day, because of all the sort of uncertainties associated with corporate transactions. But I've had one where the purchaser was ready to exchange pre-budget and complete afterwards, which does in theory trigger a tax point. If you exchange on something like a house sale pre-budget and don't complete till after the budget, that is still a tax point at which you've made a disposal. So that sort of exchange pre-budget complete after, that's been used in prior years as a sort of way of trying to bank current rates. The governments over the years have tried to forestall that type of behaviour and stop you doing it. And the last one was when they used to get this £10 million lifetime allowance for your capital gains if you have a business, where you could get a 10% rate, and they brought that down to £1 million a few years back, and they brought in some forestalling that said, if you exchange before the budget, complete afterwards, and there's a tax avoidance incentive to do it, then it didn't work. So, John, how busy are you?
Well, the very short answer to that, Nick, is we're flat out. But in all fairness, it's yeah. I mean, I'm always very wary of saying, well, our experience as okay, we're a reasonably well-known regional law firm, but of a certain caliber. But what we are doing does not necessarily reflect what the industry is doing. We happen to have a number of clients who are primarily following the courses they'd already set out. They haven't. There is when it was thought the budget might be September the 30th. There was that was a sudden surge of let's get this done. But obviously, an extra month means that those processes, which could have been done by the 30th of September, can easily be done by the 30th of October. So that's not made a huge difference. We do have one substantial transaction, which happens to happen, is 45 million, which has got to happen before the 30th of October. And we're acting for the buyers, but that's the seller's motivation. So that's clearly happening, and also property transactions, which are inherently less complicated than corporate transactions most of the time. There's clearly an acceleration of those where humanly possible. I don't mean residential; I'm talking commercial.
Yeah,
and clearly people are aware that from the press that people who perhaps want to get out of the second home business are doing it now rather than later.
It's all this sort of pressure. It creates activity, and it's always traditionally created a big tax surge. And that's probably what will happen this time around as well. There'll be additional tax collected because of the things that Richard talked about and that John's mentioned. So, it might all be for nothing. There is all this activity, but there does definitely seem to be a big black hole that needs to be filled, and there aren't that many places to go unless there's a complete rethink of how, people are saying, well, it's an opportunity to change the way we do things and do things differently. And even things like wealth taxes have been mentioned in small circles, which I find is quite a scary thing. Inheritance tax is actually quite an avoidable tax if you're careful and you plan around it.
Well, the wealthier you are, the easier it is to avoid it.
Sorry,
Sure.
say that, John.
The wealthier you are, the easier it is to avoid it.
Yeah. Whereas, a wealth tax would be more difficult. They don't tend to be work. I mean, there are only a few countries that have wealth taxes, and they're hated even more than IHT, I think.
Yeah, I think that on the point of that potential sort of change in rhetoric that we've seen a bit slightly, since the Labour government got into power. I mean, they came in with this promise that they weren't raising the three major taxes in terms of income tax, national insurance, and VAT. And there's been a slight change of rhetoric that they're not raising those taxes for working people now. And what their definition of working people might be, for example, as simple as basic rate taxpayers. So it could be employers NI going up. It could be increases to the higher rates of income tax, or additional rates, or both, or the reduction in allowances for people paying tax at those rates. Back to that point that nothing is off the table, really. I think that's one point to bear in mind. And also, I think they were keen to in their manifesto pledge that they would be clamping down on tax avoidance. And I think, us people in professional circles thought that perhaps they just got their language wrong and meant tax evasion, but it could be that they do mean tax avoidance. And actually then looking at things like business property relief, agricultural property relief, and all these potential ways of mitigating tax, back to that point of reduction in pension tax and pension contribution relief, and possibly even ISAs. I think all of those things are possible now.
Right.
But they've also again, the counterpoint is that they've also come to power preaching this message of fiscal sensibility and fiscal security. So back to the days of Liz Truss, if you remember her, I don't think they're going to do it all at once. And so I wonder if what we're going to get in October is just a flavour of the direction of travel, rather than sort of overnight introductions of terrible tax increases.
But the reality is, though, Richard, is that they kind of have a reasonably short space of time to make an impact, don't they, from a messaging perspective? So they talk about this black hole. Now, in 12, 18 months' time, they can't keep talking about that sort of thing, can they? So, it's kind of, it's the Conservatives' fault, etc., etc. That is going to run out fairly quickly. So you're right, they don't want to, they're saying they want that stability, but then, Keir Starmer yesterday mentioned about that the NHS needs serious shake-up and funding, otherwise, because it's broken. Well, that's cost money, regardless of whether it's efficiencies or whatever. So they kind of have 12 months or so, maybe, to change that direction of travel. So you're right, they probably won't do it in one go, but I can imagine the next couple of budgets are their real chance to change what that tax environment looks like, I think. I don't know whether everybody agrees with that. That's my non-tax kind of, sort of hat on, really.
Yeah,
So,
I mean, Chris, I have to say, I do agree with that. I think the only thing I would say is that, you're right that they have, they get bad news in early in the hope that people have kind of adjusted to it and forgotten about it by the time of the next election, and then in the hope that they then have that this is a 10-year project. That I think is their strategy. I think the problem with that is that they didn't get elected because people liked them. They got elected because people didn't like anybody else, and there's only so many people you can piss off, etc., etc. And you can't.
The current government's approval rating has diminished significantly already in the first couple of months because their communication and the language they use has been fundamentally so depressing. So they've got to balance that with whatever's coming in the budget as well. That actually they want people in general to feel okay about it, and not targeted and not attacked.
Yeah, but I think it's probably sensible, given that the subjects come up about what's happening in the market and CG and the impact on the budget, blah blah blah. If I do my bit, sort of, I don't know, see if that's right with you. I sort of blend in with what's going on now, but my trigger, and I do mean trigger for that, is this expression "working people." It drives me absolutely insane. It is. I actually, we had Theresa May in here when she was trying to help Alex Chalk get elected the first time round, I think, and I said it to her. Yeah, I said to her, and she just brushed it off. Yeah, I'm fed up of hearing about working people. I work. The difference being that I'm a business owner. We create wealth and jobs. And if you, I mean, it is absolutely bleeding obvious that if you tax me to death, I'm going to employ less people because I have to. I mean, it's just there is no incentive to grow. I mean, and that blends neatly into capital gains tax and the impact of raising capital gains tax for the entrepreneurial classes of the people who create the jobs. I think it's a bit of a shame that nobody who in politics these days, with the possible exception of Rishi Sunak, actually has ever done a proper job. That said, what will happen if there isn't a mid-year change on tax, and it's highlighted that the CGT rates and reliefs and so forth all change as of 6 April 2025. I can tell you what's going to happen. All transactional operations in the country are going to be maxed out and turning work down for the next 6 months. That's what happened. That's what happened on that when they took it from 10 million to 1 million. The impact was everybody said, right, get it done by. And I think I said last time on this call, we had one guy. Back in the old days, we actually did physical completions. I think he completed in 5 different counties on the 2 days before the deadline. He was just driving around the country, sets of documents, getting him signed. So you end up with deal fever, then deal drought. If they bring it in straight away, you end up with deal drought while people adjust to what's happening. But the impact on on entrepreneurs, if I start a business, and I'm probably going to sell it because I get to the point where I have to. I run out of road or capital or something, or just get the point where I want to do something else. What's my incentive to start that if I'm going to be taxed at 40-45% on any gains? That impacts on jobs. What's the impact on private equity? If you start saying, well, these guys are making themselves very, very rich by exploiting the capital gains tax rules, yes, they are, but they are driving a very large part of the corporate activity in this country. It may be seen as special pleading where you're a corporate lawyer, of course you worry about it. Yes, I am a corporate lawyer, and of course I worry about it for that reason. But there's we only exist because people want to transact, and if they can't transact don't want to transact because they don't want to start a business or expand a business because of heavier tax burdens, the whole country suffers, doesn't it? And there is just a as with all these things, if the law of unintended consequences will spread like a drop of ink dropped into a glass of water. There are rocks and hard places. There are hard decisions to be made. But if you box yourself in, saying, well, we're not going to tax most of the people who actually pay most of the tax, which happens to be people who are basic rate taxpayers, we're not going to put up the NI, we're not going to put up the income tax. Sadly, you're going to impact the people who employ those people.
So it's going to be back to go on, Chris. No, I was just going to say it's going to be quite interesting about the language they use when you sort of watch, because they always sort of talk about how much money this is going to raise and how much it's going to save and all that sort of stuff. I mean, as Richard kind of mentioned around that one sort of pensions point, around sort of 8 billion or whatever it is. I don't know, but I just the UK PLC effectively receives 2/3 of its income in the taxes that they're not going to touch, apparently. So it's are they just doing this sort of stuff to You know, is it going to have an impact apart from the impact that John has just mentioned? Do you know what I mean? Like from a finances perspective, it's going to be quite interesting the language they use actually, because they will have gone through all of this. Okay, well, if I do that, it's going to save this or raise this, and because they're going to keep talking about the black hole. So at some point, someone's got to leave that budget kind of going, okay, well, you talk about the black hole, well, you've now done this, which is going to help fill that black hole. But it's just not going to do enough, is it? Surely? I mean, money wise, I don't know.
You're not
Well,
going to be able to do it all in one go anyway. I mean, that's just not going to be possible. So,
yeah.
No,
okay.
The reality is that yeah, we but interesting balance what they said about the NHS, because I read that
yeah.
and what they're saying is we're not going to do it by putting more money in. We're
Mm.
throwing money at it because that doesn't work. I mean, one of the few bright sparks in all this for me, or slivers of hope, if it whatever the right phrase is that I've always thought that Wes Streeting actually was one of the people in the sort of starry firmament of Labour apparatchiks who actually knew what he was doing. And I think the speed they've got this and Lord Draghi, whatever it is, report out, and this and the immediate follow up on it, actually gives me some hope, because it is, we live in a world where I'm afraid right now we need more tanks and planes and people with guns than because of the way the world's going. You can't keep starving that by throwing money at a fundamentally unreformed a money sponge. But yeah, saying it is one thing, doing it is entirely another.
I was interested to just because we've got Stephen and we've got Hannah on. So from the recruitment point of view, because it's always interesting in terms of what people are doing. Are you seeing any changes or the conversations you're having with recruiters, Stephen, Hannah? Either Stephen?
I am Hannah. Do you want to go or?
Yeah.
You go first.
Sure. So I think not is the answer to any change particularly. So we had, we look at job numbers. We had, July last year there were like 2.7 million advertised roles out, and that dropped to like December like 1.5 million, and that has crept up actually. In July saw an uptick to 1.75 or something advertised roles out there. I think people are hiring I think people are hiring at being more cautious, hiring at a slightly slower rate. We're not seeing a slowdown, particularly in numbers, and the same clients that we're working with have got, I think their into recruitment teams or their HR teams, their volumes are still high. It is really mixed though. There are some parts of the market where typically two companies in the same market, some will be doing really well and growing, some will be struggling and not. It is a bit of a mixed picture.
But not
I think
indicated by people sitting on their hands because of the budget or
not particularly. No,
that's kind of what I was,
if you look at any of the websites of any of the companies on this call, perhaps you probably see that there are lots of vacancies there still, and so they're looking to grow still. So I think it's interesting where the growth is. So if you look at the sort of like needs of roles, a lot of it is manual. So sort of like electricians are up, carpenters are up, large good drivers are up. So but they're the ones that are higher in priority. Teaching bizarrely is down in numbers, and it's a really interesting picture. But I think overall it's okay.
okay.
Yeah.
Because it's positive, because normally like construction recruitment first into something
I know.
gives you a touch point that the economy is feeling a bit nervous. What about you, Hannah, at Juice?
Yeah, I think we've seen like a dip in like temporary recruitment for a little while, but that started to come back, and there's definitely been more of like a rise in fixed term contracts than necessarily there was with permanent recruitment. My colleague Ellie, she looks after the temporary desk here in our fixed terms, and she definitely, I think previously we weren't getting as many, like if we look at last year, there wasn't as many like fixed term contracts, but this year we've seen a massive boom. So I think there's still a little bit of nervousness, and people are protecting a little bit with the fixed term contracts and then taking people permanent after that. But yeah, there's definitely trends in the industry. Construction's definitely one, and healthcare we've seen a massive rise in as well. And also travel and leisure is growing massively with us as an agency. We've got a lot of jobs on in that kind of area.
But it's good that it's more the positive conversations, because we've had times when that's not been a positive conversation. So, and recruitment is always a good indicator. And we've also got Max and Sarah on the call. So Max and Sarah, in terms of lending, Sarah's from Handelsbank and Max from Impulse Capital. So what are you, any slowdown, or are you seeing people coming and trying to get things done now?
Yeah, I think we started our business in the wrong year. We had a really sort of good start, but it's just gone quiet. Such as, there's not really any. Well, there's not anything that I'm. No, there is one thing that I'm working on that isn't. It's more of a business loan. And they're not. I'm not really getting the inquiries. It's strange. I mean, lenders are saying the same thing. It's just a bit quiet at the moment. I think people, just waiting for October or waiting for something dramatic to happen for people to go, oh, okay, this is where we're living now. This is what we're involved in. So I think there are quite a few clients that sort of developers that we look after that are still sort of holding off on those developments, but those investors, I think they're still just holding off. And where my job and my business revolves on helping people, invest into those properties and those projects, but everyone just seems to be a bit hesitant at the minute. Whereas I'm not, as you know, Suzanne, I'm completely the opposite. And I am going to go on into development and things. So and that's all part of Team Cheltenham, which I guess is for another conversation. But yes.
Yeah, thanks, Max. And Sarah, from your point.
Hi there. Yeah, I think Max is absolutely correct. I mean, I think we're inundated with inquiries of people who are actually actively going out and looking for properties, not necessarily putting offers on at the moment, just holding back. Second properties, buy to lets, that seems to have gone extremely quiet at the moment, and I think that's because people are worried about the stamp duty, what kind of impact that's going to have. Investors, we've been inundated with inquiries, just like earlier, just saying about, what would happen to my portfolio if inheritance tax rates increase, and it's just really having those discussions about the ifs and the buts. But like John said earlier, it's extremely hard to give someone advice on ifs and buts because we don't actually know what's going to happen yet. And I think that's kind of what's slowed the market down, and rightfully so. We have to be cautious. Everybody has to be cautious. We don't know what's coming around the corner. And I'm hoping that it's not going to be a severe impact, but at the end of the day, the government needs to find money from somewhere. So we are going to have some severe changes. I don't think that they will remove the ISA facility completely, but like Richard said earlier, it's not off the table. 20,000 allowance has been a big allowance for a very long time. I mean, when I started banking 25 years ago, the allowance was 3,000. It then went up to 3,600 for about 5 years. It's only been recent years that it's been a 20,000 allowance. So that could potentially be one of the areas that they look at. But again, is that going to raise a huge amount of money for them? I don't know. I think our wealthy, mass affluent clients are extremely nervous about what's coming. And I think until we've had this budget, it's going to be difficult for us to be able to sort of steer the ship in the right direction.
And we've obviously got Tabitha and Jenny on the call. So in terms of people looking at doing work and planning and things, what are you saying?
In terms of individuals, with everything seems to be as per normal. One of our challenges at the moment is Tewkesbury Borough Council got cyber attacked, so they've shut down all their they're not validating any applications and they're just holding everything. So that's a bit of a challenge. In terms of land and that side of things, we're just waiting for the new MPPF to come out, and then that will help sort of crystallize thoughts on that. So like everyone else is saying, it just seems like a bit of a hold off a moment and a bit of a breather. I feel like everyone just went on holiday in July and August, and we're just starting to get that let's build back up from now.
And Tabitha, I know you in your new role at Hewer, we're still counting in weeks, but
Day 13.
Day 13. No, not even, yes, not quite 2 weeks. So would you like to give us an insight into what's happening in the industry, Deborah? There are your 13 days.
And obviously a new industry for me. I think there's caution. People are just holding off and waiting to see what is occurring. That's all I can probably add value to at the moment.
Yeah, just waiting and see. And okay, no, and it's all as again, same with recruitment, construction, those kind of things are always an indicator of where we are. And then in terms of where you are.
Yeah, I mean, there's definitely a lot more hesitation in terms of committing to kind of larger spends for production of like video content. And actually, like marketeers are really challenged because by their business owners, they're being tasked with getting a lot more for their money than perhaps they would usually. It's been quite quiet as an industry in the world of production for like a couple of years. We're doing okay, which is great. But one thing that is interesting with what everyone has been saying about like being hesitant is we're being asked for things like to film case studies, thought leadership pieces, and talking heads, which is like experts talking to camera. And I think that speaks volumes about people wanting that reassurance as well. Yeah. So I would say it's going okay, but it can always be going better.
But that's good, though, isn't it? In terms of, Stephen and Hannah saying, recruitment is kind of okay, they're okay. So it's just a matter of waiting to see what that looks like on the 30th then. And I think
I was going to say, I think it's so interesting because I think we don't really know this government, do we yet? I mean, it's you've got Keir Starmer, who probably he's a sensible, not exciting guy particularly, but you feel like he's a safe pair of hand type person. But there's a lot of people in the cabinet that are different from that, and I think that's why there's a lot of angst. And it's funny because in my career, I wasn't actually involved. I wasn't around in '97 when Tony Blair came in, which was probably the last time there was a kind of obviously a big swing in terms of potential policies. I imagine there was a similar sort of nervousness back in those days. And then, I think when he came in, him and Gordon Brown brought in some fantastic policies to encourage businesses. The whole EIS scheme, EMI, all of that stuff was developed. I mean, they were building on previous ones, but they improved, incentives for businesses and the like. So I hope it's not all going to be bad news. They want to drive growth. They want to make this country grow again. So it can't all be negative. It's just like Richard, I think, said at the start. It's just sort of the messaging's just been wrong, isn't it? It's just been dour. It's been dour.
Really? Yeah, that's what I was going to say earlier. When I agree, I think the rhetoric has changed. It hasn't been not changed, but there's been no talk about growth or productivity yet. It's all been talking about black holes, salary increases for union members, and tax. And that's why we're all really nervous here. There's been no mention of what they're doing productivity or growth, which is one of the things they were challenged on during the election. So, like you say, it's very early. We don't know this government yet at all. So that's going to be bad news out first, and then they'll look at that.
But that's more an internal thing too.
Just a quick question do we genuinely think they're going to any kind of these decisions are going to be immediately enacted, like genuinely? How often does that actually happen?
I
mean, in the last sort of 5, 10, 15 years or whatever in history, how often does that really happen? I don't know.
Yeah, it's extremely unusual.
It is unusual, but CGT, the last time they did a mid-year change was, I think, when they moved from the 18% rate to the 28% rate, and that was a mid-year move. So I think that's what I know. It feels unlikely that they would do anything on budget day, but like John said, if they don't do it and they do want to do something with CGT, it just creates this ridiculous panic between now and the 5th of April. So it's almost rather just do it from here. I think that's the concern. But I guess we'll see.
Yes, I think there'd be quite a large run for the door for anyone holding, liquid portfolios. to crystallize their gains pre-6th of April, if that's when it was going to be, which would, of course, increase capital gains tax revenues, which aren't actually very big anyway, but there would obviously be probably an immediate kicker over 6 months, which would help fill their black hole. But it's also one of those where previous messaging was that, you know, it is all about promoting growth and getting a strong economy back and all of those sorts of things. And taxation is, you know, heavy taxation is the antithesis of that, isn't it? So it could be one of those budgets, and we have had those before, where we talk an awful lot about what it could be and not very much changes because they realize that there's not a great deal that they can actually do. Who knows? It's so difficult to know. But certainly on my side of the fence, it's just all about having those conversations with your clients and agreeing that no one really knows, but at least staying close to them, and so that they feel more empowered with, you know, professional input than they might have done otherwise.
I'm not sure that's cheered everybody up, but hey ho.
You're going to be very busy, Richard.
I think I'm going to be extreme. Yeah.
Yeah.
My diary is filling.